Cool. Okay, let's rock and roll in terms of where we're at. So, perfect. Look, this is one of the things that I am most grateful for. You know, the mastermind that I'm part of is really something that, you know, feeds my soul. And what I want to share with you today is a journey around what a lot of people are trying to achieve. So we're going to talk about the Diversification 5.0 Masterclass, and we're going to share the 5 most important lessons that we've learned from the wealthiest people around the world, having invested now for 28 years. What I think is really important in terms of this webinar is that, or this masterclass, is that we do it once a month. And the reason being is that the fundamentals of investing never change. The lessons of investing never change. And it reminds me of a story. You know, I got Dr. Hannes Dreyer to come over to London. And what happened was I really loved his presentation. I loved what he taught people. And I was like, look, what you're teaching people in South Africa is amazing. You need to come to London and teach people there. And so I got him to come over, and I was going to be trained by him to teach his material. And I remember the first time I watched him, I was like, right, I've got this. I know it all. And then when I watched him the second time, I was like, this was like a day-long workshop. When I watched him the second time, I was like, wow, like I probably only picked up 50% of what he said there. When I watched him the third time, I was only at like 60%. When I watched him the fourth time, I was only at 70%. So one of the reasons that we repeat this masterclass on a monthly basis is that the lessons are so valuable and they don't change. And my learning from Dr. Hannes Dreyer is that it's really imperative that you understand the fundamentals, because that's ultimately what's going to help you get, you know, the results in terms of the long term. So without further ado, let's rock and roll and get going here in terms of this process. So I've got a question for you, and I'd like you just to think about it. What would it mean to you in 12 months or less if you were earning $5,000 in passive income without any hassle or complexity? So think about it. Put yourself in a zone, go 12 months into the future, and what would it mean to you if you were earning $5,000 passive income without any hassle or complexity? And chuck it in the chat box. I'd love to know what your opinions are. I'd love to know what your thoughts are around what it would mean to you as an individual. I am going to get you to interact. I think it's really, really important. So Linda said it would exceed my income. Brian said it'd be great. Patrick said it'd be great. I've got a second question for you. How would you like a system which can statistically help you get there 5 times faster, simpler, and safer? So again, back to Dr. Hannes Dreyer, there are formulas in terms of how you can do things. And I want to be very clear, there's no such thing as a get-rich-quick scheme. I've never found one yet in my life. But there are formulas that if you systematically and consistently implement, then you will get results. So you can go out there and you can try to do it all on your own, or you can literally copy, or even better, partner with people that have already done it, and you can actually get the results that you want in terms of that process. So it's really, really important. And my question to you is, how would you like to have a system that you could implement for yourself that will help you get there 5 times quicker, simpler, and safer? And Wayne, just to be clear, it doesn't matter if it's per year, per month, might be per week. At the end of the day, everyone has different goals. And I'm just asking a fairly generic question of whether and what it would mean to have that passive income. Because it's really, really important from a mindset perspective. You know, if you're interested in building globally diversified passive income, globally diversified passive income, then I'd recommend that you listen more, because that's what we focus on in terms of the process. So I want to share with you quickly, you know, how do we do it? Well, we believe a lot in living life unlimited, and I'm going to talk more to this. And how do you do it? Well, our philosophy is through diversification in terms of the overall process. So I want to start with a story. And this story is of 2 brothers. Now, the first brother, it was 1976. He was living in Zimbabwe. In those days, it was called Rhodesia. And the country, you know, was in turmoil. They were in the middle of a civil war. And the brother decided, right, it's time to leave Zimbabwe. So he got in his car, and this was effectively his car, and a picture of his car, and he drove from Zimbabwe down to Durban. He lived a very reactive state. So there was no proactive planning. In those days, whatever you could fit in your car was what you could take. And so they literally left the country and they drove to Durban. And I'll talk more about the story later, but it was a very reactive process. So, you know, he pretty much was at the ebbs and flows of his country, of his economy, of the political and economic environment. And he was a bit like a cork on the ocean, which is what most people are when they're in a reactive state and they're not proactive. The second brother was far more proactive. He started investing offshore in 1980. He also lived in Zimbabwe. He started investing offshore in 1980. He continued to live in Zimbabwe. And by 2003, so 23 years later, he decided that it was time to leave Zimbabwe. And so he moved to Australia. Now, over the age of 50, he bought his way into Australia. Yes, it is possible to buy your way into Australia. Secondly, he bought a house for cash in Brisbane, a very nice place in Australia. He sent his kid to a private school. And, you know, equally, his kid went on to row against some of the best universities in the world. And most importantly, in my opinion, is he never had to work for an Australian. Now, what was the difference between the two brothers, and which brother would you rather be? The one was super reactive. Like, he literally was like a cork on the ocean, and no matter what happened in the country he lived in, he was kind of had to adapt. The other one was proactive. He planned for 23 years. And that 23 years allowed him the freedom to choose the country he wanted to live in, to, you know, the house he wanted to buy, where he wanted to send his children to both school and university, and ultimately to have the freedom to, you know, for who he wanted to work for or what he wanted to do with his time. And my question is, which one of the brothers would you want to be? Do you want to be brother number one or brother number two? Let me know what your thoughts are. Which brother would you want to be? Brother number one or brother number two? Thank you, Wendy. So you'd like to be brother number two, Linda, brother number two, Brian, number two, Karen, number two. You know what's so interesting, though, Brahm, number two, is that I ask these questions, and then if you're honest with yourself, are you being reactive or are you being proactive? Right now, if you don't need to answer it in the chat box, I'm just asking you to take an honest review of yourself. Are you being reactive or are you being proactive? Because there's a massive difference between brother number one and brother number two. Brother number one didn't make a decision. He had the decisions made for him. Whereas brother number two made a very conscious decision. And that allowed him to have the freedom of choices years later. And today, right now, over the next 90 minutes, you're going to get to decide. Do you want to be like brother number one and be reactive to what happens in the world? Or are you going to be proactive and make a decision? That's my invitation to you. So, let's rock and roll. This here was brother number one. This was my father. And that's actually me as well. It was my first property project when I was 13 years old. And what was really interesting is I learned a very hard lesson from my dad. My dad did what we were all told to do. He went to school, he went to university, he worked really hard, he got a great job. He finally became financial director of a listed company. And, you know, really, by all accounts, he did what we were all told to do. He invested, he paid his taxes. And yet when my dad died at 59, he died broke. And that for me was a massive wake-up call. Because I realized that, you know, what we'd been taught to do doesn't work. I literally went and did the research, and again, through Dr. Hanestraya, I found out that 94% of people at the age of 65 will either be dead, broke, or reliant on the government. 5% of people will be financially independent, which sounds really good until you actually find out that according to the financial industry, financially independent is you earn 25% less than your last paycheck. So you're basically financially trapped. And only 1% of people at the age of 65 retire wealthy. And if you look at it, there's 100 of us starting a race, 100. And it doesn't matter who wins the race. 99 of us are not even finishing the race. And I decided there has to be a better way. So I went out, and I'm sure many of you have done the same. And I read a plethora of books, Rich Dad, Poor Dad, and, the whole employee, self-employed, business owner, investor. And this is really when I came across, the whole employee, self-employed, business owner, investor. And I don't have time to train it all today, but I'm sure most of you are like me. For 14 years, I went out and I read all the books and went on all the courses. And, I've got all the degrees. And I don't say that to boast, but I have an honors degree cum laude, a master's degree cum laude. I've done CRS, which is Certified Residential Specialist, the top out of America. I've done ARPP, which is the top out of England. I've done PDP, which is the top out of the business school in South Africa. And what I realized was that all of us are trying to ask one simple question. How do we get to the investor where money works for us and we've ultimately got that freedom? And I think that's the question that we're all out here in terms of trying to ask and answer. And that's when I started to occur to me, because 14 years I did what we all do. I went and read all the books. I went on all the courses like I explained. I traveled all over the world trying to learn from different mentors and trying to do it all myself. And that's when I realized 10 years ago, about 12 years ago to be exact, I had this epiphany, I had this breakthrough, and I hope today you have the same breakthrough, where I realized I was trying to do it all myself, and I could keep trying to do it all myself, and I could try to read all the books, and I could try to get all the knowledge, and I could try and make all the decisions, or I could partner with people. And I realized I didn't need to know everything. I just had to find the right people to partner with in terms of that process. And that was a myth for me that literally was a game changer in terms of the process. So let's go back to my journey and how I got to that epiphany. Well, I told you already, this was my first property project when I was 13 years old. I bought a piece of land, a house in Rondebosch, Cape Town. This was my first development when I was 22 years old. I did my first London property when I was 24. We bought a 3-bedroom house and turned it into a 5-bedroom house. And I then started a company when I was 25 called International Property Solutions. And we help thousands of people invest in properties in South Africa, hundreds in England, hundreds in Australia, and hundreds in America. But what I realized over those years was that 99% of us are investing in middle class or professional properties. And the problem is that we generally are stuck in country. It's very difficult to get into commercial or international property. And that's not even taking into account the massive complexities of tax and structuring and compliance and all of that space. And because of that, literally 99% of people cannot invest like the top 1%. So I had these two very painful moments that happened in 2008, 2009, which was when we had the global financial crisis. The first was that there was this developer, Barratt Homes, and in Wimbledon, London, we could buy 48 units. And these 48 units were heavily discounted. So the developer got themselves into trouble. And we could buy them at a 40% discount. They were cash flow positive from day one. They were fully tenanted, fully furnished. And I wrote this email out to our investors. We had about 2,500 investors. And down the bottom here, I said, I don't care what happens with market values in the short term. This represents a real opportunity. And what frustrated me is we needed to raise 10 million pounds quickly. We needed to buy it cash. And even though I had 2,500 investors, I couldn't get people to work together. And I remember going to Barratt Homes and saying, listen, I can't buy 48 units, but can I at least buy one? And they literally laughed me out the building. The second thing that happened in 2009, I was in Bondi Beach, Sydney, and I met two very wealthy gentlemen, and they were buying medical buildings. And I remember saying to them, like, with all my degrees and qualifications and everything else, I'd never heard of medical. And I remember thinking, well, why medical? And they said, well, think about it, Scott. No matter what happens in the global economy, people need doctors. I was like, that makes sense. Secondly, doctors never leave their premises. Yep, no, I agree with that. And thirdly, doctors are very good at being doctors, but they're not very good accountants. And I was like, wow, like, why did no one ever teach me that? You got a tenant that is economically resilient, that never leaves and pays good rent. Like, it's a no-brainer. Anyway, I said, how do I participate? And they said, no, it's easy. We got 8 slots of $5 million each, $40 million. So I ran around again to our investors. I couldn't get people to participate, and that created enough pain. And I was like, right, we are going to use technology to allow people to come together to be able to invest like the top 1%. And in 2014, we did our first medical portfolio. It was a group of 6 buildings, $16 million. We had 82 investors from 5 different continents, actually. And yeah, ever since then, it's been a game changer for me, because I realized I don't need to do it all myself. I can partner with people that have the experience, are geographically located, and we could invest alongside them. And it was a game changer, because I realized that residential property for me was high in hassle and low in return, and commercial property was high in return and low in hassle. It was like a no-brainer. Like, surely you want high in return, low in hassle, and not low in return, high in hassle. And there was one way of achieving it: partnership. So this is the track record that we've achieved over the years. We've now facilitated over 1.3 billion. We've paid out millions of dollars in dividends and exits, etc. And we got investors in 71 countries. And so the question I bring to you today is, do you want to invest in America? Do you want to invest in England, Europe, Australia, or even South Africa? Maybe somewhere else. The beauty is, I don't believe we have to choose anymore. And so the question is, why do people diversify? The number one thing that I've found from investors all over the world, and remember, I've helped people in over 170 countries, is the first reason is preservation of wealth. You've worked hard, you've built up an asset base, and you want to preserve that asset base. The second is a plan B. You don't want all your eggs in one basket. The third is peace of mind. I'm going to prove to you today statistically that diversification allows you to dramatically reduce the risk while actually increasing the risk-return ratio. So you've got lower risk with a better return. And ultimately, you're less susceptible to country risks or economic risks or social risks or political risks, which gives people peace of mind. However, I believe the most important one is freedom. It gives you the freedom to choose. It gives you the freedom to decide, where do you want to live? Where do you want your kids to go to school? Where do you want to go to your kids to go to university? Where do you want to go on holiday? Who do you work for, etc.? It's that freedom of choice, which I ultimately believe, drives us all, and why I believe that globally diversified passive income is the key that unlocks that freedom. So we live in crazy times. We've still got the Ukraine conflict. We've got inflation at 40-year highs. We've got interest rates rising all over the world. We've got fuel prices going up. We've got the stock market all over the place. And if you live in South Africa, you've even got a bunch of load shedding just to keep everything interesting. And so if we take a look at the markets in terms of what happened, over the half-year period, the NASDAQ is up 39%. As of the 7th of June, the S&P 500 went back into a bull market. So that's a 20% growth since the previous low, which is in October. But what's fascinating is that the top 7 companies, the tech companies, have grown 53%, while the other 493 are flatlined. Core inflation in America is now below 5%, and they're starting to hold interest rates. And wage growth is good, but recession is still on a knife edge. The European Union continues to raise interest rates. The UK also has risen interest rates, and to the highest level since 2008. They've had 13 rises now. Australia continues to rise interest rates. China has slowed dramatically because they scared consumers with their dramatic lockdown in 2022. BRICS continues to be very tumultuous, and this meeting of the BRICS nations that's taking place this month in terms of the overall process. And then, it comes down to your portfolio planning. And I remind you that 85% of your returns are going to come down to your portfolio planning. And it's really interesting to note that last year's winners are this year's losers and vice versa. So where are you getting the right advice? And who are you partnering with to get that advice? And then finally, the elephant in the room, the inverted yield curve, which traditionally has signaled a recession, is still inverted. So taking all of that into account, it brings us to the conclusion that there's no one right place. There's no one right asset class. There's no one right currency. There's no one right partner, which we believe leads us to the only logical conclusion, which is that diversification is essential. And we believe that the formula, having done this now for 28 years, is that you have to diversify across countries, currencies, assets, partners, and time. It's why it's diversification 5.0. There's 5 components. And at the center is diversified passive income. That is ultimately what will give you your freedom in terms of that process. So, just quickly, I've been doing this now for 20 plus years. I've presented all over the world. I've presented in live rooms. I've presented on webinars. And what I find fascinating is how many people come to me and they say, Scott, I saw you 15 years ago, 10 years ago. I wish I'd taken action then. And some of you might be sitting here and saying, Scott, I've been listening to you for ages, but I haven't taken action. And my question is, what is the pain of not taking action? You know, whether it was small rooms or massive venues, I've spoken to over 1,500 people before. I've done breakfast lunches with, people like Roger Hamilton, Brian Walsh, and we've even done, high net worth briars on game or fires on game farms, etc., where we've always tried to share with people what is happening around the world and how can you take advantage of it in terms of that process. We've done webinars, just like the one Masterclass you're sitting on now, whether it's with Neil Peterson or Prem Sunter or Dr. Dolph DeRus. And my question is, what is the pain of not taking action for you? It's fascinating. According to Harvard, that 3 months after attending a masterclass like you're doing today, 10%, you'll only be able to recall 10% of what is actually being shared. And that's why we do these monthly, because repetition is the mother of skill. If you're told and shown something and you start to experience it, you're upwards of sort of 30 to 60%. But if someone actually holds your hand and if you partner with them, you're going to be as high as 95%. And that's why for us, it's so critical to take the knowledge and turn it into applied knowledge. It's why partnership is the key that will unlock your freedom. And so I did the maths, and I'll talk to it a little bit later around the pain of not taking action, because I had one investor that said, well, what's the return on investment? And I said, well, what return are you getting? And he said he's getting about 7% in a Alan Gray account. And I said, well, that's interesting. So I won't even take into account Rand devaluation. I said, if you were averaging, which you should be, about a 14 to 15% return over 10 years, the cost of not doing it in today's money, so not in future money, in today's money, is over $50,000. That's the pain of not taking action. I learned this from Dr. Hunt Australia. We're all busy. We're all like, oh, I'll get to it, another day or another year. And that's why, I remind people, we're in the middle of August. Do you know that you've got 4 months left this year? 4 months. That's a scary thought. Scary for me as well. Where's this year gone? How many of you woke up this year and were like, nope, this year I'm going to protect my wealth. This year I'm going to diversify. This year I'm going to create a plan B. This year I want to end this year with peace of mind. Well, we get to make decisions from 2 different places. One is a place of, moving towards what we want, and another one is moving away from pain. We move 4 times more away from pain. And that's why I show people over 10 years, indecision and lack of action will cost you over $50,000. And that's why we created the mastermind. And I'll talk more to the mastermind just now for you in terms of the process. But in simple terms, it's a way where you can get results 5 times quicker, simpler, and safer. So if you're the type of person like me that wants to go straight to the top of the mountain and you want to get results quickly, you want to get them 5 times quicker, simpler, and safer, then this is something that you should seriously consider. If you're time poor and time is a big issue for you, but you still want to get results, then this is something that you should consider. And most importantly, if you want to partner with the right partners around the world, you not only want to get access to the knowledge, but you want to actually implement the knowledge and get the results, then this is certainly something that you should consider. So I want to share with you 5 important lessons that I've learned and we have learned as a team from the wealthiest sophisticated investors over the last 2 decades. They are trends, risk, diversification, structure, and team. So let's start with trends. So in my book, Property Going Global, which came out 10 years ago, believe it or not, 2013, chapter 2 was written by a guy now by the name of James Painter. Now, James is amazing. He's amazing at being able to look into the future. He uses his Elliott wave curves to look at all the graphs and to look at patterns. And he did a presentation for us in the last year where he actually said that the stock market is due to go down by anywhere up to 85%. Now, surely that's a trend that you and I should be looking at in terms of process. I'll give you another example of a trend. And by the way, if you want my book, just type in their book and we'll find a way to get you the book. So Property Going Global, if you want it, just type in their book and we'll make sure that we figure out a way to give you the book. Someone that I believe is probably the best in the world to follow when it comes to trends is Ray Dalio. Now, Ray Dalio he runs the largest hedge fund in the world, $160 billion. And what's really interesting is that over the last 40 years, he's averaged 21% return per year, on average per year. 21%. Now, do you believe that we can listen to someone that's averaging 21% over 40 years per year? I certainly believe I can. And so what's really interesting is that Ray Dalio talks a lot about trends. He's gone and studied these trends. And he talks about, you can see on the left here, you've got growth, and down the bottom, you've got time. And he says the first thing you've got is productivity. So productivity in an economy is consistently rising. The second thing is you've got short-term debt, and it works in 5 to 8 year cycles. Then you've got long-term debt, which is somewhere between 75 to 100 years. And then you've got social, economic, and political, cycles as well. And one of the things that's really quite scary at the moment is that all of these trends, both the short-term debt cycle, the long-term debt cycle, the social, the political, and the economic cycles are all intersecting in this decade. So in the next, from 2020 to 2030, they're all intersecting in this decade. Now, if you want to know more about it, I would highly recommend going and reading his book, Principles. It's one of the top 5 books I've ever read. I will also, we do what's called a wealth hack. So that's where I go and study people. I love to study people. One of the gifts I've been given is to take complex ideas and to simplify them. So I went and studied Ray Dalio. I read all his books. I read all his blog posts and everything. And I gave people a 90-minute webinar on Ray Dalio and all the trends. So if you're interested in that, just type in there Ray, and I'll make sure that we figure out a way to give you that recording. Because, again, you can spend weeks or months studying Ray, or you can just go and understand. Because what he did, which I love, is he went back in history 500 years, and he said, patterns repeat themselves. So if I look back 500 years, then I'm going to have a very good idea of where the world is today, and more importantly, where it is going. So I'll give you a good example of this. In 2008, the world was falling apart. Banks were going out of business. Insurance companies were going out of business. And if you take the London property market, what ends up happening in most cycles like this is that people focus on the panic. They focus on the fact that the market has dipped. So as an example, in London, the property market lost 20% quite quickly. But what you need to look at is the long-term trend. What are the economics? What are the fundamentals of supply and demand? Is there more demand than there is supply, which is what the case was in London. And so back to trends, this was a building that we bought in 2009. And what was interesting is there was a gentleman called Don van Rensburg. I'm sorry, it was late 2008. And we helped 32 people buy properties in this building. This gentleman bought 4 properties himself for cash at £313,000 each. He got a 26% discount because the developers were, worried because we just had the global financial crisis. He got positive cash flow rental from when the property was finished in 2011. And in 2021, he sold them for more than £1 million each. How many of you would like to buy a building or buy a property for £313,000, have positive cash flow income for 10 years, and then sell it for over £1 million in 11 years? I'd be very surprised if you wouldn't. And so people say, well, it's lucky. I don't believe it's lucky. If you look at the trends, this article came out in June last year. Night Dragon, which is a developer, is investing 10.3 billion in the Greenwich Peninsula. There's 17,500 homes being built, 84,000 square meters of commercial and retail, 20,000 square meters of cultural attractions. And what was interesting is that it literally, Greenwich Peninsula is one stop from Canary Wharf, which is the new financial capital of London. And so it's about long-term trends. And they were putting a tube station in, and this growth has all taken place over the last 10 years and is going to continue for another 10 years, which is why that property increased so dramatically. And that's why trends become so critically important. I'll give you another example of a trend. Ryan Boyder came to me in 2009. He said, I want to invest offshore. We helped him buy 5 properties in Australia and 2 in London. And what was interesting is that Australia was the best performing market in 2009, 2010, 2011. Now, did Ryan go out and buy what he wants to go and live in because he wanted to move to Australia one day? No, he didn't. He went and bought 4-bedroom mom and pop houses that every average Australian with a husband and a wife and 2 kids wants to live in. He bought them in Melbourne and Brisbane, which were the 2, highest growth markets. And 5 years later, he was able to immigrate to Australia, sell those properties, and he now lives very comfortably on the Gold Coast in Australia. Another story, Michael, 10 years ago, he was an entrepreneur. He wanted to, to diversify. And so he came to a presentation just like you are on a presentation now. And he didn't really trust me. He told me the story. He said, no, it sounds too good to be true. Well, in those days, 10 years ago, you had to come on a buyer's trip. So, the only way to teach you was to come with me on an airplane, fly to America, fly to England, fly to Australia, come and see the properties. And so Michael did. He put down his $2,000 or whatever it cost in those days, plus he still had to pay for his flights and his accommodation. And, he came and he got the knowledge and he met the partners and he started to invest. And I'll never forget that, he said to me, 10 years ago, I said, why are you doing this? And he said, Scott, because I want to make sure that I've got $10,000 in passive income. Because if I've got that, then my daughters will have the freedom. I've got 2 daughters. My daughters will have the freedom to not only work where they want to, but also live where they want to. And it's with a huge amount of joy that 10 years later, him and his wife, Lee, and their 2 daughters are actually immigrating to England and have the freedom to live where they want to and to work where they want to. And that's why, for me, this becomes so, so important. Because Michael took action 10 years ago. How many other people were in those presentations, those webinars, those live events, and didn't take action? And yet 10 years later, Michael's got the results. And my question is, 10 years from now, for you, would you like to be in the same situation as Michael and Lee? To have that freedom, to have that peace of mind, to have globally diversified passive income? He literally said, when I joined, it was the best money I ever spent. I suppose we can learn from our track record and learn from our past. So in this book, Property Going Global, I literally went out and, we did all the research. I created a 4-dimensional model based on Clem Santa's scenario planning. And it takes all the fundamentals and it puts it into a calculator, and it helps you know where to invest based on the trends. Most people are going to tell you, buy London, buy London, buy London, or buy medical, buy medical. And I think it's rubbish. There's no one country, no one city, no one asset class that is perfect. Assets and countries go up, economies go up and down. And so what's really interesting, if you look here, this is when we started investing in Australia. This is when we started investing in England. And we literally got America within 3 months of the bottom of the market. And so the question I've got for you is that if you look at the results in terms of the stock market over the last 25 years, you got about an 8% return for the stock market. And what's interesting, if you compare it to private equity, it's actually got lower returns and higher risk. And yet for us over a 10-year period, we've averaged about a 14%. So just in terms of a 10-year track record overall. And I don't have time today to talk about it, but one of the foundational things that we've created for people that want to get the knowledge and want to do it themselves is we created a digital course. It takes about, there's literally 5 modules, and you can do it in 5 days, or you can do it in 5 weeks. But ultimately what we teach you is how to choose the top 5 countries, how to choose the top 5 currencies, how to choose the top 15 asset classes, how to find the right partners, and avoid the mistakes that 80% of people make. And then finally, to create a wealth plan to take you from where you are to building globally diversified passive income and ultimately having that freedom you want. So that's the 5 modules. And then there's a bonus module, which is smart investing and how you can use technology. If you are interested in that, just type in there WGG, Wealth Going Global, and the team can let you know about it. This is one of those things where, again, people that want to do all the stuff on their own, it's a resource that we've created that literally, because this book came out 10 years ago, Property Going Global, and we needed a 10-year upgrade. But rather than write another book, along with Clem Sunter and with James Painter, we launched Wealth Going Global, which is a digital course where you literally walk away. It's super exciting. You walk away after, once you've completed the 5 modules, with an investor strategy sheet and a fully comprehensive wealth plan. You've got all the knowledge, and now it's about being able to take the action. So we created Wealth Going Global so that people, walk away from things like this and actually can get results. So what's really interesting for me with a guy like Clem Sunter, he's one of the top 5 scenario planners in the world. He's presented at Harvard. He's presented at the Beijing School of Economics, helping the Chinese, with their economy. He's got an honorary doctorate from South Africa. He was part of helping with the free transition to Nelson Mandela. And what's fascinating is that he goes out and he looks at the world and he says there's different scenarios for the world. And then there's different flags you need to look at. And then based on the flags and the scenarios, it ultimately gives you probabilities. Now, most people are just out there and they hear this stuff and they're like, what do I do with it? Well, the reason we created Wealth Going Global was so that you can take, because there's 2 different scenarios for the global, economy. There's 5 different flags and there's different probabilities. And in Wealth Going Global, we literally interviewed Clem Sunter himself. So again, my philosophy is you can go do it all yourself. You can go read his book. You can go read all his articles that are out there, on the press, or you can literally learn from the man himself. You might start to notice my pattern. In the old days, I tried to do it all myself. I tried to go read all the books. Now I just go straight to source. Now I just go straight to the partner and I say, right, teach me. Let me partner with you. What can I do? Because I've found that it is such a simpler and safer way of being able to do it in terms of the process. So that's number 1, trends. Let's go to number 2, risk. This is a great story. I really enjoy this story. So it was, again, 2008. Barclays Bank was going out of business, if you remember. And my uncle, remember, I had the father that was the reactive father, and then I had the uncle that was the proactive. My uncle is a very successful investor. And my uncle had a lot of money in Barclays Bank. And I remember phoning him and going, Bill, what the hell are you going to do? The world's falling apart. Barclays Bank is going out of business. And he said, well, Scott, don't worry about it. I'm investing in Coca-Cola. And I was like, Coca-Cola? Why Coca-Cola? And he said, well, think about it. They're diversified over 100 different countries. They got multiple products. Most people think of Coca-Cola just as Coca-Cola. I love Valpro water, also made by Coca-Cola. And more importantly, they pay income. They pay very good dividends. So I was like, wow, that's really interesting. And then a couple of years later, I was reading a book called Snowball, which was by Warren Buffett. And I found out that Warren Buffett, for the exact same reason, owns 15% of Coca-Cola. And that was when I started to join the dots. Because what I realized was that middle class and professional people chase capital growth. They try and invest in shares. They try to buy houses or apartments. They try and invest in Bitcoin or day trading or anything where it's about capital growth. They're hoping that it'll go up in value. But wealthy people invest in income. Wealthy people invest in diversified quality income streams because it's that income that gives them the freedom. And I found that absolutely fascinating. And then I started to look back to my own experience. And this house, you can see here, if you look at the date here, it was March 2002. So this was my first London property that I bought with my friend. And we just had September 11th. And England was going to war with Afghanistan. and oil prices were expected to go up, and interest rates were expected, or inflation was expected to go up, and interest rates were expected to go up. And all my friends said, "You're absolutely bloody crazy for buying a house." Just by the way, it sounds very familiar to the current economic situation. Anyway, I said to my friend, "Well, what about if we buy this house? We spend some money, we put a conservatory on it, we turn a 3-bedroom house into a 5-bedroom house, and ultimately we've got 5 income streams. The cost of the property is about £1,200 a month. The net rental is £2,200 a month. We've got a nice buffer even if interest rates go up." And we ended up buying it. And what was fascinating, and the lesson I learned, is that when you're earning passive income, you can ride the storms. And you actually, the crash came in 2008, 2009, and we didn't even care what happened with the capital growth, because actually we just earned and continue to earn lovely, lovely passive income out of the property. And it was this learning lesson for me, again, and I want to repeat it, that middle class and professional people chase capital growth, and wealthy people chase income. This was reinforced for me in 2009, 2010, when I started wanting to invest in America. And, when you looked at the residential market, some markets like Las Vegas lost 70%. Yes, you heard me right. Houses in Las Vegas lost 70% of their value. But good properties like medical buildings, as an example, just rode the wave and continued to pay their dividends all through the crash. And no one really cares what happens with capital growth, up or down, if you're getting good, solid rental returns. Another good example was in COVID. We bought this building in December 20. When did COVID start? 2020. Yeah. So we bought it in December 2020. And it was in Florida. And again, a lot of people moving from New York and Chicago down to Florida. And so actually really interesting. These buildings were full. They paid great dividends right through COVID. And it's another great example of how wealthy people invest, even in difficult times like COVID. So a good example of this was Hilda Lunderstedt. She started investing with us in 2014, and she started investing in medical buildings in America, and she built up a globally diversified income. I actually managed to get her invited to Necker Island. This was her and I on Necker Island with Richard Branson, and her properties actually paid for her trip to go there. And then in 2019, she immigrated to America, and it was her global passive income that allowed her for more than 2 years to get established in America, to be able to get set up. And so again, my question is, there's no such thing as a get-rich-quick scheme. But if you're proactive and you go about it in a methodical way, you'll notice the pattern here where 10 years plus, plus minus 10 years, people start to have the freedom to live where they want, to choose what they want, to make the freedom of choice that they want in their life. So that's lesson number 2. Lesson number 3 is diversification. Now, according to Ray Dalio, the single most important component to financial success is diversification. And he literally says, and again, I've recommended his book already, Principles. He says you need to diversify across asset classes, within asset classes, across markets and currencies, and across time. Now, what's really interesting in this book, Money Master the Game, Tony Robbins in 2008, 2009, was so dismayed because 10 million Americans, middle-class Americans, were bankrupted. And so he said, bugger that. So he went out and he interviewed 50 of the wealthiest people in the world, one of them being Ray Dalio. And Ray Dalio had never, ever shared his secret before, his secret formula. But Tony Robbins finally got him to share the secret. And so at the age of 75, he shared the formula. Now, remember, this is a man that has managed to achieve 21% return on average per year for 40 years. Can we agree that we should be probably copying what he does if he's getting those results over 40 years? Yes or no? Just give me a yes or no. I'd be interested in your thoughts, basically. Because you're going to notice again, I'm literally saying we can go out there, we can try and do it all ourselves, we can try and read all the books, or we can literally copy and partner. Thank you for all the yeses. So what is his secret formula? Well, it's not so secret anymore because he shared it at the age of 75. He said you need 15 uncorrelated bets in an attractive array of assets that don't move in tandem. reduce the risk by 80%, and the risk return ratio increases by a factor of 5. Now, I've done this for a number of years all over the world. And the moment I say this, people's brains like switch off. They go, I don't know what that means. It's a bunch of gobbledygook to me. But actually, what's really interesting is it's super simple. All he's saying is that you need 15 quality investments. 15 quality investments that don't move in tandem. That's all he's saying. If you do 15 quality investments that don't move in tandem, if you do that, you'll reduce your risk by 80% and you'll increase your risk return ratio by a factor of 5. It's literally that simple. So if it's that simple, why are we not all doing it? And I want to share with you, this is a recording from a TED Talk with Ray Dalio. This is what he had to say.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So again, it's a TED Talk. You can go look at it, but basically diversify well in a balanced way. You need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the single most important thing. Ooh, hang on. 2 seconds quickly. I just noticed my laptop was not plugged in. Anyway, thanks, Alex, for letting me know. Cool. So I want to talk about some mistakes I see when it comes to diversification. So mistake number 1. So this happened to me. There's a doctor that I know, and he went to see his financial planner, and his financial planner said, hey, you know what you need to do? You need to pay off your mortgage. He lived in South Africa. Actually, he lived in George, South Africa. And what was interesting to me is that if you look at the rand over the last 40 years, the rand to the US dollar has lost 6% year on year for the last 40 years. So here you've got someone paying down an asset in a depreciating currency. It doesn't really make sense. Secondly, what's even worse than that is I meet investors all day long and they say, oh, I've got 10 flats or I've got 15 flats in South Africa as an example. But I'm getting great capital growth. And I'm like, really? If you do the maths, okay, I virtually guarantee you those properties aren't cash flow positive. Trust me, I've owned lots of them. And, for more than 10 years, they weren't even cash flow positive, particularly if you buy from a developer. And so I've got these properties. They're not cash flow positive. I'm hoping for capital growth in a depreciating currency. Like, think about everything I've said. Middle class and professional people chase capital growth. Wealthy people chase income. And you're chasing capital growth in a depreciating currency. Doesn't really make sense. So in the book, Property Going Global, I actually did a thing called the Global Wealth Index, and I updated it now in Wealth Going Global, the digital course, where you can literally see the rand, in 1983, 1993, 2003, 2013, and 2023. By the way, this formula works no matter what currency you want to use. So whether it's rand, rubles, you pick your currency around the world. But ultimately, what it helps you do is compare a basket of goods. It compares your ability to buy first world assets. And what it shows you is that the rand has lost 92% of its buying power over the last 40 years. 92%. Now, I want to give you a personal story. So this is a house that I bought in Teeson Island in South Africa in 2013. And it was a beautiful house. It was this house here. And on the face of it, I thought I'd done really well. I bought the property for $5.5 million. and I sold it for 14 million. Now, if you look at it on the face of it, it's like, wow, that's a great return. You're really good at what you do, blah, 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 blah. Smoke up my you know what. But actually, when I went and did the maths, and I had this inkling, and which is why I did the maths, and I went and did the maths, and I was like, there's something wrong here. And so I went and did the maths, because in Rand terms, I made 161% return. But then I went and did the maths, and it was actually quite scary, because the amount of money that I put in up front was the equivalent of about $177,000 in those days. So if you take the comparison of the Rand was about R9.50 to the dollar at the time. And I just sold it now. And if you take all the profits and take the capital gains tax and all that off, I got back $154,000. So in dollar terms, even though in Rand it looks like I made lots of money, in dollar terms, I lost $22,000. And what gets even more scary is that if I'd invested that in commercial buildings in America, as an example, and got an average 8% return, I would have had 3 times the money in dollars. That is a scary thought. And my question is, how many of you are making investments based on emotion versus making investments based on numbers? So, mistake number 2. Don't worry, I'm going to diversify. I'm going to go to England and buy a flat. And I've heard it all before. Kensington or Manchester or Leeds or some little shithole in the middle of, Liverpool or something. And what's really interesting to me, you take all your money and you put it into one property, one apartment generally. You got one tenant, you got one management agent, and you got one income stream. Now, what happens if that tenant stops paying? Boom, house of cards falls over. I mean, talk about proverbially having all your eggs in one basket in terms of that process. Sorry, I'm just going to turn off the heater here. My heater turned on with my laptop. I don't need extra heating. So, mistake number 2. Don't worry, I've made all these mistakes myself, and I've watched hundreds of thousands of people make these mistakes, which is why I can share them with you so that you too don't copy these mistakes. Mistake number 3. So this is a friend of mine, and you've heard me say all along, medical is a great investment. Well, I had a huge comeuppance now with COVID, because I thought medical was bulletproof. If you've heard me present for 12 years or more, I've literally gone on and on and on about medical. But what happened? Boom. Come COVID, they basically stopped all the elective surgeries. So we don't buy the primary hospital, but we buy all the buildings around the primary hospital. So all of our tenants are the people that manage elective surgeries. So if I need to go for a wrist operation or a knee operation or, all of the stuff that's elective, not life-threatening, not ICU, elective. And they stopped it all. I know my brother's an anesthetist. And so many of those people couldn't pay rent. And so suddenly the darling of the industry, medical, was making no income. This gentleman had his money in 8 different medical buildings. So you could say, well, I'm nicely diversified, but he wasn't. He was in one company. He invested with one company in America. He invested in one team. He invested in one income stream. He invested in one asset class. He invested in one country, and he invested in one currency. Again, all of his eggs, literally in one basket. What about number 4? What's really interesting to me is that people say, but it's only a South African problem. No, it's not. In the last financial crisis of 2008, 2009, Australia lost 46% against the dollar. The pound lost 40%. You've got to be very careful of trying to pick the country. And you might say, but it's definitely America right now. Really? Maybe you should go do some more research on what Ray Dalio is saying. Or maybe you should come along to our mastermind and see the in-depth knowledge that we've been sharing around where the US dollar is going. Or maybe you need to come and learn from James Painter. I don't believe that you can ever bet on one country, one currency, one asset class, one partner, or one period of time, which is why you need to diversify. And then number 5, again, let's take one country. If I put all my money into American real estate in 2007, 2008, and then it crashed, and I mean, as I said to you, markets lost anywhere from 40 to 70%, you would have felt like a class clown. If you put all your money into commercial building in Brexit, they lost 20%. You wouldn't have felt so clever. Or what about Dr. Dolph DeRoos that owned 8 commercial buildings in Christchurch and, was technically flying until the earthquake. And then he had insurance, no problem. But the insurer said, no, it's an act of God. And his buildings were condemned. So he still owed the mortgage. He got no insurance. The buildings are condemned. He can't get rent, and he went bankrupt. No one country is bulletproof. So that's why I believe so strongly in diversification 5.0. And if I look at what's happened over the last, 12 months, 12 to 18 months from my perspective, I've invested in 10 different assets, 4 different continents, 5 different currencies, 9 different asset classes, and 10 different partners. And it's what we refer to as diversification 5.0. One of the things I love doing is helping people build portfolios. This lady actually had $100,000, and we helped her build a blended portfolio between income and capital growth, where she was getting a total return of about 15%. And I actually showed her, I said, listen, if you go and invest in, one asset or leave your money in the bank, compared to a diversified portfolio, what would that scenario planning look like over a, 10 to 20 year period? A good example of this is Chad. Chad started investing with us in 2011 in Australia. Then he came to America in 2013, 2014 and started investing in America and has built up globally diversified passive income. He actually introduced structured notes to our platform, which is another asset class to be able to invest in from a passive income perspective. And he actually still lives very comfortably in South Africa, but as a global citizen with globally diversified passive income. So, when you look at the different asset classes, and I can see Wayne here, could you give us some examples of asset classes that you might choose? Most examples seem to be around property. Not necessarily, Wayne. So if you take the top 15 assets, and if I've got time at the end, I'll actually show you the top 15 assets that we focus on during Wealth Going Global. But what's really interesting with portfolio planning is that you've got sorry, my son is trying to call me. You've got all the different types of assets. And what we do in the mastermind every single month is that with our partners in Cali, I'll explain a little bit more just now about who they are. We go and analyze the portfolio and what is happening with the different asset classes and how you can invest.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return and is the fundamental building blocks of asset management and a financial plan that's going to, produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
So, again, asset allocation and your portfolio construction ultimately relates to 85% of your total returns in terms of it. And, if you look here, as an example, private equity over 5 years versus the stock market. So you got the stock market in dark blue, you got private equity in light blue. Over a 5-year period, 10-year period, 15 and 20 years, private equities outperformed equities. What's also interesting down the bottom here, if you look at risk, so you got risk on the bottom and you got return on the left-hand side. So you ultimately want to be in this top left corner. You want high return, low risk, and that's what you want. But yet the majority of us, in terms of our portfolio, would look something similar to this, which means we have high risk, low return. And the question we've got to be asking ourselves is where are we getting the right information and who we're partnering with. If you look at the stock market over a 25-year period, you're making an average return of about 9.5%. But when investors try and do it all on their own, 3.6%. And then what's really interesting for me is this graph in terms of return on investment. So I can go into this in a bit more detail later if you're interested. But I had a gentleman come to me and he said, hey, Scott, what's the return on investment for being part of the mastermind? And I said, well, as an example, if you invest $5,000 and, to be part of the mastermind in your growth and personal development, and you've got $12,000 to invest, and if you're earning 7% return, and you should be getting an average of 14 to 15%, over 1 year, it doesn't make any sense to you because it doesn't make any sense. But over 5 years, you're now starting to 2x your money. So if you put your money in today's money, and you put your money in and you're going to double it, it's kind of a bit of a no-brainer. What about over 10 years, you're starting to 10x your money? And again, this is not magic. It's just time value of money, it's compound interest, and it's doing the right thing and partnering with the right people. And then over a 30-year period, the numbers become, huge. And it really starts to make a material difference. So, I always say to people, are you investing for 1 year? Are you investing for 5 years? Are you investing for 10 years? Or are you actually investing for generational wealth? And if you're investing for not only yourself, but for generational wealth, then something like a mastermind becomes an absolute financial no-brainer when you look at it from a return on investment. Right. Lesson number 4, structure. So what's really interesting around tax and structuring is that I learned a myth. I've done 4 offshore structures myself. So I'm not an expert. I don't claim to be an expert, but I certainly have watched enough people make mistakes to know what you should and shouldn't be doing. And what I've realized is you've got to be very careful going to some of these small islands, the Seychelles, Mauritius, BVI, Isle of Man, etc. There's an example of one client who lives in Portugal, and he's got all his investments in the Seychelles, and the Seychelles is blacklisted according to the European Union, and he can't get access to his money. So, what becomes really important with tax and structuring is that you don't get stuck in a box. You need to have someone that can understand what are you trying to achieve and help you build a bespoke solution to actually achieve that. And that becomes really, really important. The other thing that's really important is that I had one lady say to me, yeah, but I wasn't sure about the tax and structuring. And so I got an inheritance of, I think, about 20 million Rand, and I haven't done anything for 6 years. And I said, you can't, you've worried so much about tax and structuring. The Rand has lost like nearly 60% of its value in that time. And so you've got to be very careful around tax and structuring and getting the right advice, and specifically working with people that can help you build globally diversified passive income and not stick you in a corner or in a box. So a good example is a guy called Manu, and Manu invested in, well, he tried to do it himself, and he actually lost $250,000 in terms of the process. And he then, found ourselves, and he started investing with us, and he actually ended up becoming a shareholder. And so often in life, it's not what you necessarily get, but it's also what you save. The question I've got for you is, how valuable is your time? How valuable is your money? And you could save yourself, years, decades worth of pain and frustration and money, because that's what's probably going to happen if you try to do it all yourself. Trust me, I know, I've done it. Or you can partner with people, and you can do it 5 times simpler, safer, and faster. So the question I've got for you is, are you feeling a little bit overwhelmed? It's a lot of information, 28 years worth of knowledge downloaded into 1 hour. And I always get, people always give me jokes that it's a bit like, drinking from a fire hose, like it's just so much information. So I want to make it simpler for you. And I've got a bit of an offer for you. I asked you 3 questions up front. I said, what would it mean to you in 12 months or less if you had $5,000 passive income without any hassle or complexity? Just remind yourself of what your message was to yourself. Secondly, I said, how would you like a system which could statistically help you get there 5 times simpler, safer, and faster? My third question to you is, could I make you an offer? Could I share with you a way of how you could do this safely and simply over the next 12 months? Can I have your permission? Can you just give me a yes or a no? Because you really have a choice. You can try and do it all your own. I did it for 14 years. You can go read all the books. You can go on all the courses. You can travel all over the world. You can make all the mistakes that I and the other investors have made. Or you can literally partner. And I just want to share with you what I learned and hopefully offer an easier way for you. So I remind you that what we're focusing on is to live a life unlimited. It's about to give you the freedom of choice. And how do we do that? Well, we believe you do it through diversification. This is the formula. If you want to do it yourself, go for it. This is the formula. You need to diversify across countries, currencies, assets, partners, and time. And ultimately, it's about building globally diversified passive income. So I started and I joined a mastermind in 2011, and I've been overwhelmed by the impact that it had on my life. And when I went and researched it more, I want to share this quick video with you.
Now, this is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So that's what I found. You know, I joined Roger Hamilton's mastermind in 2011, and I just found that I got real rapid business and life transformation. And so for me, that's why we created our mastermind. You know, having done this for 20 plus years, people come to me all the time. They say, listen, Scott, like I want to get results. Can you help me? Can you coach me? Can you hold me accountable? I said, great. Let's take the best that is out there and copy it to provide people and to help them get results quickly, simply, and safely. So who's the mastermind for? Well, it's for people that are into personal development. It's for people that, you know, are coachable and can work together and know that they don't know everything and want to learn through partnering. It's for people that are looking for globally diversified passive income. So if you're interested in building passive income, specifically, you know, globally diversified passive income, and you want to aim for at least $5,000 or more, then it's for you. And it's for people that, you know, have property or have started on, you know, the investment ladder and ultimately, you know, are on the journey and are now wanting to build globally diversified passive income. You know, most importantly, it's for people that truly value their time. So, you know, most people like me are very time poor. So I want to figure out how to get the results in the fastest, safest, and simplest way. And so it's for people that are time poor, that want to be able to get the results, and they also don't want any more hassle or complexity in their life. So they want the information, they want access to the partners, they want access to the results, but they want it quickly, simply, and safely. Who's it not for? It's not for complete beginners. It's not for time wasters. It's not for people with no capital. And it's not for difficult personalities. You know, I get to work with you in a one-to-one journey. And so for me, this becomes really, really important. That's the formula that we actually implement in terms of the overall process. So it's diversification across countries, currencies, assets, partners, and time. And how do we do it? Well, there's a 5-step process. We have the setup, which is where I literally sit with you in a one-to-one environment, and we get very clear on your outcomes. I'll explain this more. Then we get clear on your starting point. So we know where you want to get to. We know where you're starting. We then help you build a wealth plan to get from A to B. What's most interesting to me, though, is that most people in life don't have a plan. And yet those that do have a plan are still not very good at executing it. You know, if you look at the research that's out there, and you even take New Year's resolutions, 9 to 12% of people that have written down their New Year's resolutions actually achieve their New Year's resolutions. 9 to 12%. And of the people that haven't written anything down, it's less than 4%. And so for me, you know, it's one thing to have a plan, but it's a whole nother thing to have the accountability, the coaching, and the execution to be able to get the results. And then finally, it's about the investment and the investment rhythm. So let's look at that in a little bit more detail. In terms of the outcome, I'm a qualified international coach. I take you through a process in a one-to-one session, and I get very clear on your top 3 outcomes that you're looking to achieve and your top 3 measures. And we then write them down. For me, we call it the lighthouse approach. Most people are sort of caught up in their problems and their drama. We get very clear on the outcome that you're trying to achieve. And, you know, this guy has been a coach in Germany for 27 years, and he said he absolutely loved the process. Then step 2, we get clear on the starting point. So this is where we analyze your current property portfolio, and we say, right, what is your starting point? What does your portfolio look like? We also work with a family office. So what's fascinating with a family office is that in the old days, You used to have about $250 million to be able to work with a family office. And yet what we do is we work with Callio. The founder is a guy called Garth Wellman. He's also the CEO. And the reason he partnered with us is he said the 1% can pay for advice and get results. We need to support everyone else to get the same advice and the same results. So they made a commitment that anyone that joins the mastermind, they will actually work with. So they help on the tax, the structuring, if people have pension plans and portfolio plans and things in RAs or in the stock market, and they ultimately help not only analyze your current starting position, but then they help us, in a robust way, build out a robust wealth plan to help you get from A to B. And, for me, it's critically important that you walk away with a wealth plan. And, we actually have a freedom calculator to help you calculate and figure this all out for yourself. Then for me, it's all about the execution. So every single month, most people find themselves in this away state, particularly with where the world is at the moment, countries like South Africa, etc., withdrawn, fearful, inability to make good choices, demotivated. For us, it's all about a towards state. Happy, ability to think clearly, creative, see new opportunities. And how do you actually do that? Well, it's all about the mindset. We've got a whole bunch of modules in terms of the mindset, but every month we check in, we work together, and we make sure that, we've got things like time management, mental wealth, flow, all covered. But the part that people get results by, and the part that I've learned, having been part of masterminds for 12 years, is the accountability tracker. There's a way that we help you, it's the carrot and the stick, to help you be accountable, to execute. And then it's about coaching. And it's fascinating. The stats when it comes to coaching are really, really overwhelming in terms of people who actually, so again, you can do it all on your own, or someone can literally hold your hand. Like I can literally hold your hand. We go on a journey together and we help you get the results. And 96% of people that have been involved in coaching actually would continue to want to do it in terms of the process. Patrick, if you are interested in the mastermind, just type in their mastermind and the team can get back to you. The fifth step, which is after getting the execution, which is really important, is the whole investment step. So every month we check the market. So we have the Callio team come and they literally explain what's happening in the market. I love it. It's like a TED talk. Literally in 18 minutes, they tell us what do I need to know about what's happening in the global economy, are interest rates going up, why did Silicon Bank go bankrupt, et cetera, et cetera. I'm not interested in a 4-page document. I'm not interested in a 4-hour presentation. Give me the TED talk in terms of that process. So we understand quickly, and it's brilliant. Every month, I'm learning so much about global economics and what's happening with the global markets. Then, we've got the currency analysis from James Painter and letting us know what's happening with currencies. And they give us the updates monthly, and they give us a live session once a quarter. Then it's about portfolio construction. So the guys at Callio literally go out and they tell us what's happening in the asset classes every single month. What do we need to know about the different asset classes, and what should we be doing when it comes to investment? Then every single month, we go deep in one asset class. So for 90 minutes, we go deep and we learn about that asset class. But what's interesting is that one of the gifts I've got, having done this for 20 years, is I've got access to the best partners. So around the world. So not lecturers, people that are actually doing it. So as an example, literally tomorrow, we're doing London residential, large-scale institutional. So we're dealing with one of the top 5 developers in London, and he's literally going to teach us. Like 20 years ago, he was one of the best developers to literally build buildings and sell them off to retail investors. Now, we're literally partnering alongside him. We're going to own buildings where we build and hold the entire building. And it's so exciting in terms of where the world's going, because we can now invest like institutional investors, but we get to learn from literally the best, and that's what every month we go deep in one asset class. Then, and we've done a number. We've done multifamily, which is one of the best, risk-adjusted returns in America. We've done structured notes. We've done industrial. We've done co-living. We've done gold and silver, just as an example. Then finally, we've got the investment. And, this is for the mastermind, we've got deals where we do them exclusively just with the mastermind. We had one close literally last week, which was an industrial deal in America. And then finally, it's reviewing the portfolio on an ongoing basis and tracking the progress. So for me, what I love most, and this was a lovely testimonial we got, is that most people, this is not their DNA. Like, they don't understand the financial lingo and all of this stuff. And Niels and Catherine, as an example, were both highly successful doctors. But they said they loved being on it because they've learned so much of the lingo and how it actually works. And, now when they're dealing with the likes of Calio, they're not being completely in the dark. And they said it is so liberating. And, that's the freedom that I talk about in terms of that, overall thing, in terms of it. HINS, I'm not sure what A stands for. But yes, through the mastermind, people in the UK, we've got a number of people in the UK that are investing, yes. So what happens after the 5 steps is they return to step 1. And, every 12 months, we should be reviewing our portfolio in terms of that overall process. So again, I remind you, 3 months from now, probably, 10% chance of remembering everything we've discussed. If you get part of a community or something, you've got somewhere between 30 to 65%. But if you join a mastermind, you've got more than a 95% chance of actually achieving your results and ultimately internalizing this. Not my opinion, Harvard. So just some of the bonuses. You've got access to myself, priority access to myself and the team. You've got access to our tax and currency partners. You've got access to asset class mastery. So all of the different assets that we've done through the year, be they structured notes, multifamily, medical office, industrial logistics, co-living. We did a wealth report where we analyzed the 500,000 wealthiest people in the world and what is their portfolio construction, gold and silver. And, you've also included in the mastermind is Wealth Going Global. So we believe very strongly in building a very solid foundation so that you can build a tall building. So that's actually included as well. And you've got a bonus session with Clem Sunter, where he goes into all the different scenarios for the global and for South Africa, plus the flags and the probabilities. You've got access to the Wealth Hacker subscription for 12 months, which is a bunch of substance. I'm not going to go into the detail, but there's a whole bunch of access that you get on the Wealth University. If you're interested in immigration, having done this for 20 plus years, we can recommend the best immigration agents. We've helped many, many people immigrate to America, England, Europe, Australia, etc. And then something we were doing for years is bias trips. And, we're looking to possibly bring them back in terms of if people are keen to actually fly over and get on the ground. So if you're interested in the mastermind, my strong recommendation is literally go to the link, diversificationmastermind.com. Thanks very much, Alex, for chucking it up in the chat box for people. And literally, it's an application call. So this is by invite only. It's a 30-minute call. And all I'm trying to do is I want to ascertain what you're trying to achieve. I want to basically see what are the risks, what are the opportunities you're looking for. And I want to see if you qualify, and I also want to see if we can help you. It's very much a symbiotic journey we go on. And that's why I do it myself. We meet one-to-one, takes about 30 minutes, and we just get clear. What are you trying to achieve? I can explain in a bit more detail what we're doing. And on the assumption there's synergy, then there can be a possible invite to join the mastermind in terms of that process. I would ask people that if you do commit time, it's my time, your time, it's very valuable to both of us. Please make sure that if you book it, you turn up on time, and we take that time in that session. And I would really ask you, to only book time if you actually committed and you're going to turn up. I love the fact that very, very seldom, 98% of the time, I've never had any problems and people turn up. So really appreciate that, people respecting my time, your time. And then lastly, one of the challenges with this process is it's not a mass market approach. It's a one-to-one approach. That's why I interview people one-to-one, because I want to make sure that it's the right fit, that we can help you achieve your objectives. I'm all about helping people get results, and I want to make sure you qualify and that there's a symbiotic thing. So unfortunately, we can only onboard sort of 3 to 5 people at any one time. It's my time, it's Calio's time, it's your time. And it's it's a bit of time to get set up, because like anything good in life, you want to get set up, you want to have a solid foundation, and then it's about the execution. And that's why for people that are time poor, this is the right way to do it. In the old days, you had to come on an airplane with me and fly overseas and take, 2 weeks out of work, and everything else. Now you don't. Now you join the mastermind and we accelerate this process for you and help you get results. So if you are interested, literally go along to diversificationmastermind.com and book a time. I know I've got some time slots available tomorrow afternoon, my time. If you're in a different time zone and there's a time slot that doesn't work for you, just type in there mastermind and the team will get back to you and find a time that actually suits you in terms of that process. Well, suits you and me in terms of that process. I do tend to try and do one-to-one calls only on a Wednesday. So there might not be, a huge amount of time slots available. But yeah, if you are interested, just go and book a call and I look forward to chatting with you. I wanted to share with you that if you take coaching in terms of return on investment, you're looking at about a 344% return. And if you put it through a business, it can be as high as 700%. So again, how important are results to you? If you go back to that story about Michael, and you could be, go back in your life 10 years. Imagine if you could have copied what Michael did 10 years ago, and you could be in the same situation 10 years later. And again, statistically, you can try and do it all on your own, or you can literally partner and have someone, coach you and hold you accountable to get those results 5 times quicker, simpler, and safer. So for me, a satisfaction guarantee is really important. You might have realized I'm 150%er, and what I mean by that is whatever I do in my life, I, go at it with 150%. So, I've had one gentleman join. He said, Scott, I've been watching you for 10 years and I need you to kick me up the you-know-what. Some people need the carrot, some people need the stick. But one thing I'll guarantee you is I will do whatever I possibly can to help you get your results in terms of that process. So I remind you also of this return on investment. If you were to invest the likes of $5,000 in your progress and ultimately getting there 5 times quicker, simpler, and safer, if you invest and had about $1,000 that you wanted to invest over 12 months, or you had $12,000 in capital, which is roughly 150, 200,000 Rand, if you literally take the return on investment over a 5-year period, it's a 250% investment. Over a 10-year period, it's over 1,000% or 10x. And over a 30-year period, it's a huge, huge percentage. So my question sometimes in life is not what you can afford to do, but it's also what you can afford not to do. Sometimes not what you can afford to do, it's what you can afford not to do. So again, I just want to remind you, if you are interested, go to diversificationmastermind.com. I want to share with you just some pictures because I want to show you how we used to do it 10 years ago. So this was us 10 years ago in New York. There was a group of us. We would go over with 10 or 12 people and we'd travel around the country looking at properties and meeting partners. This was us in Times Square. This was me actually with Dr. Dolph DeRuss. So he's the guy that wrote this book, Real Estate Riches. And again, my philosophy is, go and learn from the best. So in America, in the last crash, I paid to go on a buyer's trip with him. I paid $10,000 to go on a buyer's trip with him. This was me in Phoenix, literally buying properties on the steps of the courthouse. It was pandemonium in 2011, 2012, 2013. This was us having a bit of fun in the Grand Canyon, having a drink down the bottom of the Grand Canyon, going to a show in Vegas, buying properties in Atlanta. This was another property that we bought in Atlanta. This was inside multifamily in Florida. So you can see different groups of people, different ages. Funny enough, this guy, Ricky, came straight out of university and is now, a highly successful investor in multifamily in America. In the old days, you had to fly with us and come and open bank accounts. It sounds so weird to say the old days 10 years ago. And, learning from the partners. So we would sit around the room and we would learn from the partners on the ground. What are they doing? How do they invest? What are the risks? What are the opportunities? Now we have the mastermind. You don't have to leave the comfort of your desk or your couch. So again, more pictures, learning, having a bit of fun in Memphis on Beale Street, outside the New York Stock Exchange. This was up in North Dakota, which is where they had all the fracking and there was a huge oil, rush. and having a bit of fun, even with not Oktoberfest, what's it called, Halloween. Interesting enough, these three gentlemen, or the two brothers here, are two of the most successful shopping center investors. They've they're the biggest shopping center investors in the country, and yet they don't try and do it on their own. They fly over and they do it through partnership. And so why do I believe you should work with us? Well, I've heard all the different excuses before. It sounds too good to be true. I don't know how. I don't have the money. I don't have the time. I don't have the knowledge. They're the three biggest myths that people tend to block themselves with. And so for me, if you don't have the time, well, the mastermind has been created for people that are time poor. It's literally for people that want to get results. They want access to the right information. They want access to the right partners. They want to get results. Time is their most valuable resource. And so it's been created for time poor people. I don't have the money. Well, maybe the mastermind might not be the right place to start for you, but Wealth Going Global might be the place to start for you. And, I don't have the knowledge. Well, you're never going to get the knowledge unless you actually, none of you ever learn to walk by reading a book. You learn while doing. And so for me, there's no better way to get the knowledge, to get access to the partners, and to learn while doing in terms of building globally diversified passive income than through the mastermind. And why I believe you should work with us? Well, we're the only ones doing global diversification. There's lots of other people doing medical buildings, in America, or, flats in England, or, structured notes or whatever. But there's no one doing it where you're diversified across countries, currencies, assets, partners, and time. And just a bit of a story from my side. I told you I went on my first mastermind in 2011. I was so impressed by the results that I got. I spent $14,000 to join Peter Diamandis in Singularity University, $25,000 to be part of Roger Hamilton's Crystal Circle. I paid $40,000 to be part of Mavericks, which has actually got me to go to Necker Island and spend time with Richard Branson. And this was me with Tony Robbins on Necker Island, where I spent $50,000. So I've invested a huge amount of money in getting me to where I wanted to get to. And my philosophy is, if I put myself in the room where I'm the dumbest, poorest person, I can only grow, and I can just grow that much faster by people that are uplifting me. And one of the things that I'm so grateful for in our mastermind is the diversity of people. We've got amazing people from Ireland, England, Germany, Italy, South Africa, Zimbabwe, Zambia. We had someone sign up recently from Swaziland, Australia, New Zealand. It's a phenomenal group of people, men and women, all different backgrounds, and we get to learn and grow together, which is just absolutely amazing. Which brings me on to the fifth point, which is about team. It's the fifth lesson. The only way to invest and to diversify at the moment is you go along to your financial advisor, they go through a financial institution, you go through a vehicle like a REIT, and then you invest. But there's many layers of fees. You're effectively in the secondary market. You correlate it to the stock market. And so there's a lot of risk. The other way to do it is to invest directly in a property on your own. There's 16 different middlemen between you and your investment. There's large amounts of money you need. There's a huge amount of hassle and complexity. If you've ever owned a property, you'll know what I mean. Second, more so overseas, it's even more difficult. And so those are the two options. And if you want to do it on your own, you need to make sure that you've got lawyers, brokers, tax, due diligence, family office, management agents, KYC, etc. Or you can literally follow 4 simple steps. Sign up, set up your account, browse and invest, and earn an income. And so for me, myth number 8 is that you can go and do it all yourself. You can literally try and create all the processes. I've been doing this for 28 years. You can spend millions of dollars, trying to find the right team, trying to learn the right information, trying to find the right partners, and probably 10 or 20 years of your time. Or you can literally, which is what you'll do if you do it on your own, or you can literally partner and get access to all of that knowledge, including all of the mistakes, so that we can make sure that they're avoided. And just an example, this was an off-market deal we did through the mastermind. It was an industrial deal in Phoenix. It's a 7% cash on cash, a 17% annual return, a 3 to 5 year hold. That means if you put $100,000 in, you would aim to double it in 5 years. So it's a 2x in equity multiple and roughly a return on investment of about 20% a year. So this gives you an example of what our masterminders and myself invest in terms of the process. And finally, if you're looking at your team, well, it's very hard to get access to a family office, but through our mastermind, as I've already explained to you, we literally have access to Calio. We work with them. You get to work with them one-to-one. We get to work with them monthly. And it has, really, really strong impact in terms of your overall strategy and ultimately getting you to that globally diversified passive income that you're looking for. A good, final story is a guy called Alan, a highly successful developer. He knew he couldn't do it all himself. He flew over to America with us. He met with our partners. He partnered alongside us in deals. He sat on the investment committee, and 10 years later, he's actually immigrating to America. So again, he knew that you don't try and do it all yourself. You do it through partnership, because that's ultimately going to help you get the results that much quicker, simpler, and safer. And so my question is, why not join 4,000 other investors who we've helped achieve wealth protection, a plan B, diversification, peace of mind, freedom, global citizen, empower your children, immigration. Ultimately, it's a living a life unlimited. If they could do it, if I've explained to you all the different people and all the different stories, if they could do it, then so could you. How much would you like to be one of our case studies 10 years from now? We've literally created the mastermind to help people, to hold their hand, to partner with them, to help them get there 5 times quicker, simpler, and safer. That's the formula. It's diversification across countries, currencies, assets, partners, and time. And ultimately, it's about building globally diversified passive income. Why did we create the mastermind? Well, having done it myself since 2011, after understanding the research that it literally helps you get there 5 times quicker, simpler, and safer, we decided we're here to build results. We're here to help people get results. And so we created the 5-step process. And I believe a lot in simplicity is power. You could say there's 500 steps, but that's not what's important. There's 5 steps that we go through over a year to help you get globally diversified passive income. And so just to remind you, we start with the outcomes. I sit with you one-to-one. We get very clear on the outcomes that you're looking to achieve. We call it the lighthouse approach. Then we get clear on your starting point. What is your current property analysis? Plus, we work with our partners, Calio, to help sure we get very clear on your starting point. We then get very clear on your wealth plan. How do we get you from where you are to where you want to be? And then it's all about the execution. On a monthly basis, we got the accountability, the mindset, and the execution, the coaching, the accountability, and the mindset to help you get that result. And it's about staying in that towards state. And what I find most valuable here is it's the accountability tracker and the accountability coach to help you get results. And then about the investment, well, this is where we work on a rhythm, again, monthly with Calio. We review the market and the currencies. We review the portfolio construction. We go deep every single month on one asset class so that over a 12-month period, you're not an expert in everything, but you've got a deep understanding of each asset class. Plus, you've got access to world-class partners around the world. Then you get to actually invest and be part of the deals. And finally, it's about reviewing and tracking your progress. And, for me, after 12 months, what do? Well, you go back to step 1, because this is a journey. There's no end date to this. Just, this is what we're doing for the rest of our life and hopefully for generational wealth. So again, to remind you from Harvard, if you've passively listened for the last 90 odd minutes, thank you very much for your time. I hope we've added a lot of value. But statistically, in 3 months, you're not going to remember 10% of what we've said. If you made a decision and took action, something similar to what Michael did, and booked, literally, Alex has put it in there, you just go to diversificationmastermind.com and book an appointment. Take action. 10 years from now, it will have a significant impact. And statistically, you've got a 95% chance of achieving what you want to achieve. And again, for those of you who want to be financially orientated, I remind you not only of the upside, but also what's the return on investment in terms of, doing this and the difference between doing it on your own and versus partnering. It's a substantial return on investment if one looks at it like this. And, I can go into more details if people are interested. So, in conclusion, just to remind you of the bonuses, you get access to me and the team. My partner Alex and I work very closely with our mastermind participants. You get access to our tax and currency partners. You get access to asset class mastery, which costs, nearly $1,000. You get access to Wealth Going Global that costs over $400. You get access to Clem Santa's Masterclass. You get 12 months Wealth Hackers subscription, which is $200 itself. You get access to the immigration agents, and you also get first access to the buyer's trips if and when we start them again. So if you're interested, literally go along to diversificationmastermind.com. As I said to you, it's a one-to-one call. And, in the old days, you used to get on an airplane, you used to fly over with me, and you'd come and buy properties. Now we do it through, digital. It's why we've got this incredible community from Ireland, England, Italy, Germany, South Africa, Zambia, Zimbabwe, Australia, New Zealand, and most recently, Swaziland. But, this is what you had to do in the old days. You used to have to fly over. This was us watching ice hockey, Madison Square Gardens, outside the New York Stock Exchange, buying commercial buildings, buying houses, having a bit of fun, again, learning from partners in terms of the process, watching a bullfight, another commercial building we bought, sitting in an investment committee meeting and learning from the investors on the ground. This guy, Paul Shalander, is one of our partners that we invested in 7 medical buildings with, an amazing guy. And this was him and Dr. Dolph Duras talking. And another commercial building we bought. And this was actually us in Hong Kong doing a buyer's trip. No, not a buyer's trip, an investigation trip in Hong Kong when we were looking at properties in the Hong Kong market in terms of the process. More buildings that we invested in. And as I said to you, what you might have picked up through my energy today is that whatever I do at 150%. And so if you're looking for someone to hold you to account, if you're saying to yourself, right, I've got 4 months left in this year. Well, I love that saying by Einstein. The definition of insanity is to keep doing the same thing and expect different results. The definition of insanity is to keep doing the same thing and expect different results. And so if you want to do something different, go to diversificationmastermind.com, book a meeting with myself, and find a time that suits you, find a time that suits me, and we will ultimately run through it. I'll make sure that there's a mutual fit. I'll check if you qualify, and also I'll make sure that we can assist you in terms of what you're wanting to achieve in terms of the overall process. And then for those of you that wanted my book and you wanted Ray Dalio, literally go along to diversificationmasterclass.com/bonuses. Alex, if you could just put that in there, I'd appreciate it in the chat box as well. You will get a video with Calio, which was a 2023 review. You've got the Ray Dalio webinar, you've got the Ray Dalio TED Talk, and you've got my book, Property Going Global. So one thing that Alex and Shane and myself always do whenever we try offer a masterclass is you never leave without, value. And so, hopefully you've got access to all those bonuses and resources. I want to leave you with a thought, and that is that, it's an African proverb. If you want to go fast, go alone. If you want to go far, go together. And I think, again, I remind you that for 14 years, I wanted to go fast. I went out and I read all the books, and I traveled all over the world, and I bought properties in different countries, and I tried to do it all myself. I thought I have to do it all myself, and it just was so hard and created so much complexity. And then, 12 years ago, I had this brainwave where I was like, wow, this is so much easier through partnership. And it takes a little bit longer through partnership, but you go much further. And, as we teach people statistics, according to Harvard, you can go 5 times quicker, simpler, and safer. And so I started today with a question for you, and it was, how would you like to earn globally diversified passive income? I then asked you a question, would you like a system that could help you do it 5 times quicker, simpler, and safer? And finally, I asked your permission to share with you a way to do it. And there's a proven formula through the mastermind for you to be able to achieve that. So I want to thank you for your time. I want to thank you for being here. If you think this would be of value to others, share it with them. We have recorded it, so we can share the recording. If you are interested, there's my email, there's my WhatsApp. Send me a WhatsApp if I can help you. I'm much better on WhatsApp than I am on email. And I'm going to go back a little bit, and I'm just going to put this screen up. Alex, thanks very much for your help today. I deeply appreciate it. I know that there's been some questions that have come through, both in the Q&A and in the chat box. And there's a couple of questions that I think that you've been sent as well that I'd love you just to ask me in terms of that process.
Yeah, thanks, Scott. It's been a pleasure. I think one of the big questions that hasn't really been addressed is what is the relationship with Callio Capital? I think you've spoken about who's this for, as well as if people are time poor. But yeah, let's focus on that question.
So Callio is a family office. A number of people don't know what a family office is, but ultimately family offices are out there to help the wealthiest people, the top 1%. They give them advice. They help them manage their global portfolios. And generally, they weren't accessible to you and I, Alex. We've worked with Callio for over 10 years. Our wealthiest clients have invested. They've got 60 families that they look after. They manage about $600 million in terms of overall assets. And with the relationship we've got with Garth and his team, we said, look, we never quite know what the boundary is as to who we can, recommend to Callio and who we can't. And so they made a commitment to us that anyone that joined the mastermind, because they're making a financial commitment, because they committed to getting their results, Callio would commit to supporting them and us in this process. So we've partnered with Callio in this mastermind, and they are part of the journey. And people not only get a one-to-one with Callio, but more importantly, the Callio team are actually part of it every month, helping us on our journey to achieve the results.
I think there's one last one here that's relevant. I really need accountability. How will you hold me accountable?
So I think the slide that's relevant, and if you don't mind, I'm just going to go back a few slides here. Where's it gone now? So it's the step 4. There we are. It's the accountability tracker. So myself and Alex actually work. So we're the two that work on the mastermind. And we work very closely with people around the, holding people to account. So we've got this accountability tracker where ultimately, and if you sit, in the one-to-one, I can explain it to you in more detail. But we basically, you've got your highlights, your challenges every single month. If you've got any questions, and then what are your key actions? So we always work every month on 3 key actions per month. And then we run a robot system, green, orange, and red. Are you on track? Are you not on track? So it's very much part of coaching and accountability, which ultimately leads to execution and results, where most people are very busy and they want to do something per year, and then they blink and the year is gone. I found from being part of a mastermind with Roger Hamilton is that if I check in every month, I might be the type of guy who does it the night before, but at least every month I'm making measurable progress to my outcome. So whoever asked that question, Alex, for me, is that what I find the majority of people that really resonate with the mastermind are one of 2 things. They either are time poor and really want to get the results quickly, simply, and safely, or they've watched webinars, they've been to events, they know they need to globally diversify, they know they want to do it, but they need someone to give them the proverbial kick up the butt. And that's where the coaching and accountability comes in.
So I think you've addressed that question. No other questions at this stage.
Nani asked a question here. Is it possible to join your team from Namibia? So yes, very much so. My understanding is there's no restrictions, from anywhere. So it's more about whether people qualify at an individual level. Like I said to you, one of the things that I'm most grateful for is the amazing caliber of people, Ireland, England, Italy, Germany, South Africa, Zimbabwe, Zambia, recently Swaziland, Australia, New Zealand. So Kunani, we would love to have you from Namibia. It's a new global geographic destination. But yeah, it's not about where you're from. It's about what you want to achieve. There was a question that came up. I did answer it about people from the UK. So we've got a couple of people in the UK that that are already part of the mastermind and are able to invest in our mastermind off-market deals. Anita, we will contact you about the mastermind. There was a question that Wayne actually asked. Could you give us some examples of asset classes, mix you might choose? Most examples seem to be around property. Wayne, I will go through this in more detail because I know you've booked a one-to-one, so we can go through in a bit more detail. But let me just see if I can find this for you quickly. So this is actually module 3 of Wealth Going Global. And I wasn't planning on sharing this, but let's just go through it quickly. So what I do in Wealth Going Global is I take people through the 8 golden rules of like what we look at when we go through investing. Then I take them through the 15 most commonly recognized assets and which ones we invest in and which ones we don't. And then finally, we go into the top 15 and we explain what are the top 15. So to answer your question, Wayne, yes, there is mainly commercial real estate, a group of different assets, but not only. You've got ETFs, you've got structured notes, you've got gold and silver, private equity, venture capital, crypto, etc. So, if you're going to diversify, across countries, currencies, assets, partners, and time, you also can't be all in just property, in terms of that process. So, I don't know if that answers your question. And as I say, in the one-to-one, I'm happy to go into that in more detail for you. Cool. Let me go back to that slide. I'll share my screen quickly. I just want to see if there were any more questions that came through. Sorry, there are quite a few questions that came through in the Q&A as well. So Wayne said it is quite difficult to do. I completely agree with you, Wayne. I've dedicated the last 28 years of my life to trying to understand the space, and it is difficult. Let's not beat around the bush, definitely. But what can be so much easier is that you can try and do it all on your own, or you can do it through partnering. And, I don't know how many times I can say that to emphasize it, but I really learned the hard way, when I was trying to do it all myself versus partnering with people, I could go, so much simpler and safer, which is why I love that African proverb in terms of the process. Okay, I think I've been through the Q&A. Let me know if anyone else has any other questions. I can see there's another chat that's come in. Okay, Wayne, great. So yeah, Wayne, I know you've booked a one-to-one, so we'll definitely go through it. Bram, perfect. Thanks for the kind words. I appreciate it. I hope that today we've added lots of value to you. I hope that we've got the cogs turning. And I do remind you of the story of Michael. And why I say I remind you of that story of Michael, we did that presentation in 2013, you could say late 2012, early 2013, to hundreds of people, live in rooms. Plus, we did webinars to thousands of people. And we told them what was going on in America. We told them about the opportunities in America. And most people felt that it was too good to be true. In fact, Michael was even honest with us and said, it feels too good to be true. But I tell you what, I'm prepared to invest and come on a buyer's trip and learn all about it. And he took action. And what I love about that story is 10 years later, his goal of achieving globally diversified passive income has happened. But more importantly, his why has happened, which has given his daughters the freedom to live where they want and to work where they want. And that's my invitation to all of you. We're going on a journey. This is not a get-rich-quick scheme. But if your next 5, 10, 15, 20 years is important to you, then I would highly recommend that you get access to the best information and the best partners. And there's no better way to do that, in my knowledge, having done this for 28 years, than joining the mastermind and ultimately, not only getting access to us and our partners, but also getting access to Calio. And so if that's something that resonates with you, maybe be like Michael. Don't sit on the fence. At least book a meeting. Come along to the diversificationmastermind.com, book a time that suits you. You and I will get to have a chat and we can decide if it works for you and if it works for us and if you qualify, etc. There's no, what would I say? There's a saying I love in life. The greatest risk in life is to risk nothing. Who knows? Maybe this is the catalyst that you've been looking for. And with 4 months to go in the year, I must admit, I looked at myself in the mirror and nearly fell off the bloody, you know, I nearly fell over when I realized I only had 4 months left this year to turn this year into, you know, a successful year. And I guarantee you I'm not the only one who had a lot of goals and ambitions this year and blinked and suddenly realized it was the middle of August. So if you're wanting something that's a catalyst and something that ultimately can really move you with momentum towards the end of the year, then the mastermind is it. So I look forward to seeing you. Diversificationmastermind.com. If it resonates with you and you think it's going to be of value, fantastic. Alex, thanks for all your help. I deeply appreciate it. As always, you and I work very closely together in terms of trying to hold people's hands and hold them to account. I wanted to ask you to finish off from you, Alex. You know, you've been helping a number of investors invest in this off-market deal that only the mastermind people could participate in. And what's sort of been your general reaction to people, you know, that you know, I won't use his name specifically, but someone that joined the mastermind recently, you know, and wanted to get access to the knowledge and the partners and went from doing nothing, you know, having a huge amount of experience, but not having invested overseas, to investing overseas in less than a month. What's been like for you dealing with people like that who finally have the light bulb being opened up for them?
I think in one word, refreshing. It's been very refreshing to actually speak to people and have a conversation about these things that we work with every single day. So yeah, it's been refreshing as well as eye-opening to how many people believe that it's actually impossible to achieve. Yet by just doing the fundamental steps, it's quite easy at this stage of where we are. So refreshing.
I completely agree with you. And I like that word refreshing. I think that's the point, is that, you know, you can do it all yourself and it can be hard and, you know, a lot of hassle and complexity, or it can actually be, you know, refreshing, and you can ultimately achieve your objective. So just a reminder, if you want the bonuses, you can go to Diversification Mastermind Masterclass, sorry, I keep getting it wrong, masterclass.com/bonuses. You've asked if there's a possible to get the recording of the session. Yes, we will make the recording available, so you can watch it as many times as you want. As I said, the fundamentals of investing don't change. Those 5 lessons of the wealthiest investors, it's why we bring it out every month and why we repeat the session every month, because the fundamentals don't change. And in conclusion, you know, you can do it all yourself. And if you want to go fast, you can go alone. Go for it. I did it 14 years. Trust me, it just gets harder and harder and harder. If you want to go far, go together. With that, thank you very much for your time. We deeply appreciate it. And we look forward to seeing you get your results. To those of you booked, I look forward to seeing you. Can't speak English now. I look forward to our one-to-one session. Cheers.